Mr. Nally, I'd like to start with the audit side of PricewaterhouseCoopers and your opinions on that. Now, one of the solutions that we oftentimes hear is about mandatory rotation of auditors to solve a lot of problems. But I noticed from your speeches you've been very skeptical about that as a good enough solution. Why is that?
Well, I start with the whole issue of what we should be focused on is the whole issue of audit quality. And I think a lot of the discussions taking place around the world today in response to the financial crisis, what changes should be made with regard to our profession, what we do, and so we welcome that debate and we welcome that discussion, but it needs to be focused on what it is we can do to enhance quality. Mandatory firm rotation is one of those areas. It sounds good, but when you think about the complexities associated with that, the institutional knowledge that gets lost, which I think is so important to do a high quality audit, we would remain skeptical as to whether or not that would achieve the desired result of really enhancing overall audit quality.
According to you, what would be probably the most effective method today, or the most workable solution that one can think of to solve these problems?
Well, I think it gets back to what is the problem you're trying to solve, and some of the proposals that are being talked about, I'm not sure really have identified what the problem is. If there is an issue with regard to what auditors do today, and what the expectation is of what auditors do, that ought to be an issue that we talk about. I often refer to that as the expectation gap. There's standards that are out there that we certainly follow and adhere to today, and if there is the expectation either by investors, by regulators, by others involved with the financial reporting process that auditors should do more or they ought to focus on different areas, that's a good discussion to have because there is that expectation gap, and those are the areas that we should be talking about. So, for example, could we do something to enhance the reporting of risk, for example? I think that was an area coming out of the financial crisis that there seems to be more interest in terms of how companies manage risk, how they report risk, and should auditors have involvement with that process. That's an interesting area to really expand and have good conversation about. Again, if there's an expectation that auditors should be doing more of that, we should be talking about what should be done to really meet that expectation. Other areas deal with, are there opportunities to simplify the way we report on financial information? The auditor's report today is pretty technical, a lot of jargon involved with it. Is there a way to simplify that would do a much better job of communicating what we're responsible for, what we're not responsible for?
In the Indian context, given the problems that you've had with Satyam 2 years ago, you must have gone through a lot of internal restructuring. Now, what have you come up with to probably avoid a situation like that again?
Well, I think there's a lot of lessons learned coming out of Satyam, and that's certainly the way that we've approached it at PwC. I think in a market like India that's fast growing, that's got a lot of opportunities, you need to continue to build an infrastructure to support that growth, making sure that you've got the right people and the right jobs. So we've made changes from a leadership standpoint to deal with that. We've made significant commitments to training and education to our people to make sure that they have the skills, they have the wherewithal to really be effective, to carry out their jobs, their responsibilities, if you will. And we've supported our Indian colleagues here in terms of, resources from outside of India to really make sure that we've got the right experience to deal with the issues and challenges that this practice is facing. So we've tried to approach this in a constructive way, lessons to be learned, and ultimately the focus is on what it is we can do to really drive quality and enhance our quality in everything that we do, and that's been our orientation over the last 2 years post-Satyam.
Can you give us an idea of what you've got from the CEOs? You conduct the CEOs survey. What is the sense that you're getting from them now?
Well, the CEO survey, it's an annual survey that we do. We release every year in Davos. Very extensive survey. Over 1,200 CEOs participate. in the survey, represented by over 63 countries. So we think we have a pretty good feel for how the CEO community is really feeling about the prospects. And one of the things that was most encouraging in this year's survey was that the degree of optimism that the CEO community is expressing today versus a year ago is remarkably different. It's almost at a pre-crisis high, going back to the 2007-8 time period. And what's interesting about it wasn't necessarily dependent upon where the CEO was located. We know this economic recovery is mixed, depending upon what part of the world you're looking at. But the CEO community, just about all over, is feeling much more positive, much more encouraged about the prospects for the next 12 to 18 months.
Going forward, we're probably going to have emerging markets contribute more to global growth than ever before. What are the broad trends that you see emerging out of this change in the pattern of global growth?
Well, I think you're absolutely right. I think we're seeing a real shift in the economic balance here from the west to the east, or the developed markets to developing markets. That's very clear. The growth prospects that the business community is looking at clearly will come from these emerging markets, India being one of them. And with that, I think it presents a lot of challenges. I think companies that historically are used to operating in a developed market need to get much closer to these markets to really understand what the business issues are, what the business opportunities are in these markets. So you're seeing companies really begin to shift how they think about how they do business in these emerging markets. For example, companies historically, would have a much more centralized research and development to function. You're seeing companies today, get R&D on the ground closer to the markets themselves to understand the unique aspects of the markets, so that they can develop products or tailor products as appropriately to the needs of that marketplace. So I think you see CEOs really focused on what is it that they have to do differently to really capitalize on the opportunities that are emerging in these markets.
Since you bring an international perspective, I'd really like to know, are you happy with the current state of policy making in India? Do you feel it's a little too volatile for anyone's comfort?
Well, I think whenever you're dealing with a market like India, there's going to be unique challenges that you have to deal with. And to me, that's just one of the aspects that makes operating in a market like India or Brazil or China or any one of these markets different than what we've come from. And I think the more that we as a firm can understand those unique aspects and making sure that we really respond to those, I think is going to be critical. But what you see, as you go from different markets, is those are unique challenges that really have to be understood. They have to be dealt with if, in fact, you're going to be successful.